Okay, well, let's get some perspective on the global stuff first. Geoffrey Dennis is independent emerging markets commentator, is joining us right now to take some questions. Geoffrey, great to have you with us here. Good morning. Thanks for your time. Foreigners seem to be returning. There's a lot of room to return because, if you look at banks, for example, which is the sector here in India, which they used to own in the most sort of large fashion, there was a lot of selling, especially in banks, and banks have started to perform again. What's your sense, Geoffrey, on the stance of foreigners towards emerging markets and, of course, the best performing amongst EMs, which has been India?
Well, I think if you look at the overall data, clearly emerging markets are having a decent year. They're not having a great year. They're up about 5 or 6% in terms of the overall index. But I was just updating my numbers just before the call, and all of the increase this year, or virtually all of the increase this year, is accounted for by two markets: Taiwan, which of course has a lot to do with what's going on in the US tech sector, and now India. Now, I think if we look at India, obviously, given who I'm talking to, it's very good to see this nice recovery that you've seen, steadiness and then a modest recovery since the election sell-off. And I think there is a lot of optimism still about the Indian market, and that is clearly coming from what is still a very, very good macroeconomic outlook. I think we're not far away now from interest rate cuts in India, assuming the currency continues to hold up, which it's doing. And one of your colleagues was mentioning the inclusion of India in the JP Morgan bond index, which will increase fixed income flows, which will have some sort of spillover effect into equities as well. So I see the emerging market picture overall being a little bit cloudy, with the dollar's rally really hurting a lot of markets. But within that, I think India looks very good indeed.
What's your own expectation? When are we going to see the first rate cut from the Reserve Bank of India?
I don't really forecast that, but clearly inflation's coming down steadily, slowly, to be fair. Real interest rates are sitting around 2.5%. I would have thought we should get a rate cut within the next 3 months or so. I don't really have a formal forecast of that, but certainly we should be moving in that general direction, because one of the big stories in emerging markets one of the big stories in markets over the last few weeks has been the strength of the dollar overall, as the ECB has started to cut. One or two other central banks have started to cut. We've had to push out some expectations of when the Fed is going to cut first time, which I thought was July. It's probably now going to be September. And what that has done is push the dollar up, which is typically poor for emerging markets. And yet within that the rupee's held up relatively well. Now, I think the budget situation will be something that the markets will watch, and the central bank will watch, the RBI will watch. But the inflation trend, the steady dollar, gives me hope that we'll see interest rate cuts within a few months in India.
Well, you spoke about two things. One, you said that the future for emerging markets in the very near term looks a little cloudy, and in that India still looks relatively better. If you could give us a sense of your expectations of returns from the emerging market space as a whole, and in that India, and in India as well, what are the sectors that you believe are poised to grow faster?
With respect to emerging markets overall, I think assuming that the Fed does start to move in September, as I say, I hoped it would be July, but it's probably too late for a rate cut in July. The economy is clearly slowing a bit now. The unemployment rate at 4%, I think, is a signal the Fed will be cutting before too long. Plenty of commentators think that the Fed is probably risking a steeper slowdown if they don't move quickly. Once the Fed starts to move, I think you'll see a weaker dollar, and that will provide some support for EM. My call for EM for the year as a whole is up 10%. We're up 5.5 to 6 now. I'll stick with that 10% call, frankly, at this point, which probably means we will underperform developed markets in 2024. As far as India is concerned, in terms of sectors, I still think investors should be focusing on domestic sectors. You mentioned banks a few moments ago. I would certainly focus on banks. Given the economy is still growing at 7% plus, some of the other leading domestic sectors that would look interesting for foreign investors. And I think there's always going to be a lot of foreign investor interest in in some of the technology names, some of the pharma names as well. And so that would be the way I would tend to look at it. Although I don't really have a formal model portfolio, but those would be the themes I would focus on.
What's the call on developed market returns? You said 10% for emerging markets for 2024.
Like, unless the US has a big sell-off, which I don't think is coming, it's probably going to be in the 14 to 15% range, I would think. I think the US is going to slow down. I think it will still go up. I'm still bullish the US. But I think logically it'll slow down for a period of time until we get some more clarity on when you start to see a rate cut. And is there a risk to the economy? I still think the soft landing is intact. The other big driver of developed markets has been Japan, which has lost a bit of steam lately. And so I think up 10% or so at the moment. I suspect it'll be up about 15% for the full year. The risk to that would be to the upside, I think, depending on how strong the US. But I think the US will lose a little bit of momentum now until we get much, much more clarity as to when the Fed is going to cut rates for the first time.
All right. And India, just a word. You said EMs would be 10%. How much would India be?
Oh, sorry, forgive me. India's up about 14% now in dollar terms year to date. And I think that's going to go up to probably around 20 by the end of the year. I'm not super bullish about markets from here. I'm just positive generally, modestly positive. And I think the Indian market in dollar adjusted terms, which is obviously what I focus on as a global, as a global commentator, I think it's probably going to be up something like close to 20% for the full year.
Okay, well, Geoffrey, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate you joining us here on CNBC TV 18.